Everything I've shown you has been done with data sets that are incredibly expensive. For instance, I'm a professor at the University of Puerto Rico in the Graduate School of Business, and I know how much our CompuStat subscription alone costs. It costs $55,000 per year. So it's really not very realistic that us little guy retail traders have that kind of money to be able to even do a search for these seasonal trending stocks and these other anomalies, value, momentum, dividend yield. But if you don't have the ability to do it, then everything I taught you is worthless. So what I'm going to do now is show you the software that I use to find seasonal opportunities in these specific anomalies. And this software is based on a 3-step process. It's very important to have good processes in your investing. First is scanning, second is sorting, and third is charting. We go through that particular 3-way process in this software. It's very important to know what this software does really well, and it's important to know where you need other pieces of software, other pieces of information to really drill down to get the right stock. What I want you to understand is that I don't care what software you ever use, you never want to let the software make a decision for you. Landturn is a very close friend of mine who has a software company, and due to our friendship over the years, he's been able to program not only my ideas into software. This is a software platform not based on my idea. It's actually based on an idea of Scott Berry, who's a friend of ours. He had a brilliant idea. He said, let's look for seasonality looking exactly 1 month back. Now, what's great is they've really spent a lot of work on this software. It's gone through multiple versions. It's been running for multiple years. It's an absolutely fabulous tool, and that's why I use it. It's also the most cost-effective way I can find to actually go out there and scan for stocks. So that's why I use this particular software. Now, this is preset so that when you pull up the platform, whatever month you're in, you're going to get that tab. But you can change this. It's looking back 12 months in March. It will find trends for 80% of the time, showing both. In this case, you can set it for either bullish or bearish. Generally, when I'm looking for stocks, I'm interested in bullish. And that is when I'm actually out there looking, for instance, for maybe a dividend stock where I'm looking for a seasonal kick. So if I'm looking, though, for a stock that I already hold and I want to be concerned about it getting weak on its own, then I can switch for bearish and actually look for a specific stock. I'm going to show you how to do both. But anyway, let's go ahead and set it for bullish. And when we hit dig now, it'll kick out a big list for us. Okay, there we go. So we've got GameStop Corp. Well, and that's a rough one. Isn't that interesting that GameStop Corp has had 83% wins for 13 years straight? Right now, GameStop Corp is getting hammered. So it'd be very interesting to look at it, but I'm concerned about the fact that I'm seeing lots of their stores shut down. Look at Waste Management. That's another interesting one. So we can literally take each of these symbols and we can switch out and go look at specific charts. Now, if I click on GameStop, it will actually give me the chart of GameStop. And this is really useful because you may not know that you have access to the charts very, very quickly in this particular software program. But this shows me GameStop. And look at how GameStop has had a very bullish run from January into February. And now this is a bullish kind of a candlestick formation. So we're seeing already right off the bat an interesting stock that is seasonal that's been kicked out. Now, what we can do is we can analyze GameStop in terms of its momentum strength, in terms of its dividend strength, in terms of its earnings strength, and in terms of its size, and in terms of its value proposition, right? Which I've also showed you how to measure against its net working capital. So I've given you a number of different ways to take any of these stocks and then go screen them and find out where they're weak, where they're strong. You have to remember that as a successful stock investor, I can tell you that I look at hundreds, if not thousands. I actually look at thousands and thousands of stocks every year. I look at a price chart of every single 3,700 stocks every quarter just to make an impression on my retina. But then when I'm going and looking at specific stocks like GameStop or Waste Management is another one. Look at Waste Management. Or let's look at Kellogg's. Wow, there's a lot of interest. There's Kellogg Company. And notice how it's rising really nicely going into March. So we've got interesting opportunities that are popping right out of this program right from the gate. What's incredibly powerful about this program is that they've set it up now so that I can actually go back to step one and I can search by symbol. So for instance, Caterpillar is a stock. No, let's take, for instance, McDonald's. Okay. And see what McDonald's is doing. McDonald's is a high dividend yielding stock. I know it's a high dividend yielding stock. I'm not sure where it sits in size. Small stocks are below the median market capitalization and large stocks are above. So we can find that on the internet really fast. These are things that, you can do on your own, figure out what the basic size is. And when we look at, for instance, McDonald's, it gets really bullish in October. Oh, look at this. It gets very bullish around March 23rd through April 19th. January through February, November through December, and it looks at that, August through September. That's interesting, right? And we're talking about 1310. We're talking about some pretty high number of years that this thing is kicking out. And then you can see where it goes bearish. It tends to get real weak, or not bearish, but weak around here. Let's look at both bearish and let's look at both and see what the difference looks like. And let's see if it gives us more stuff. Okay, good. So yeah, bearish. It gets real bearish in July, May. And look at that in April. It's interesting because we've got the Mars retrograde coming in around April through May. This is when the Mars retrograde is dominant, at least this year. Now, June's another weak month. It's not bearish, but it's just very weakly bullish during that month. Now, there's different groups of stocks that I actually run in some of the different courses that I have. I have a momentum group. I have a dividend group. I have a bunch of different groups of stocks. And so one of the things that I really like about this platform is that if I go over here to settings, then I can select a specific group of stocks and actually go through and look at it. This one right now is set for the S&P 500. And I can also set to hit the actives. Now I've got 1,111 symbols. And you can see that this is going to create a much, much larger list of stocks when we come back over here. And if we do, for instance, a sort by month, then it's going to take a lot longer for that sort to run. You can see it's taking a little bit more time because we're sorting across a lot more stocks. Let's see what comes up when we do a full market sort. It didn't take forever, but I probably could have made a cup of tea. Let me sip my green tea as I say that. Why that ran. Look at this. Look at the iShares Emerging Markets Index. Now we noticed that the Emerging Markets Index was a major opportunity to increase the Sharpe ratio of our portfolio. And so we can actually make an entry on the Emerging Market Index in March and then hold for probably a pretty good long period of time. So this is very interesting that we've got an opportunity to add the international index to our portfolio. That's very, very powerful. We've got GameStop again popping up. So GameStop is really right up there at the top. And we can see we've got a lot more companies. We've got Perrigo. We've got Consumer Staples. We've got Bed Bath & Beyond, 4.975. We've got a lot of interesting stocks that we can now go in and we can look at on a chart-by-chart basis. Like, for instance, Bed Bath & Beyond, go figure, right? This is probably a pretty small company, and so it could benefit from the small firm effect. So this is where I would be looking for a small firm, a potential value, and look at the dividends and everything else. I'd take each of these stocks and run through the filters in terms of value and everything else that you can do. Now, this is an interactive community, so when you do have questions, throw them up there, and I'll do my best to answer them. Sometimes I may have to tell you to, ask some LAN or something, but we'll figure it out. Let's go back and take a look at sorting by a symbol, and I'm going to look at flow that came up on our screen. I have traded Flowers Foods before. I've traded options, and I've traded shares in that particular stock. And so now what we're going to do is Land will turn this down to like 75% when we do an individual stock. He'll set it for 8 years of history, 30 trading days, seven minimum, and then he'll hit the dig now button. It should go pretty fast. Okay, yeah, great. So March 7th through April 13th, we're actually a little bit late on this trade right here, but let's go ahead and get it to kick open the chart and look at that. We've had a major drop in the value of the stock, so it looks pretty scary. I would be very concerned about buying the stock. It looks like it's in a downtrend. And I didn't think Flowers Foods was doing well. So what you need to understand is not every single stock you're going to look at is going to turn out to be a monster winner. That's the main thing. Let's take a look at Colgate-Palmolive. And here's one that's in a really nice uptrend. The thing about Colgate-Palmolive is it's also a nice dividend stock. So knowing, for instance, that if we go back here and search for Colgate-Palmolive, CL, there we go. Colgate-Palmolive hit dig now. Well, Colgate-Palmolive, January, not very strong in March. Isn't that interesting? Let's see what the chart actually looks like. Colgate-Palmolive. It looks very strong. That's a nice bullish stock. So Colgate-Palmolive, again, a dividend paying stock. And it really started to move in January. And look how it keeps going. So that's the important thing to understand. Here is a stock that looks very tradable in Colgate-Palmolive, whereas Flowers Foods did not, just from the first blush. Now, that doesn't mean I wouldn't go pop them over into another platform that I use to actually look at charts, which is by the same software publisher. And that is exactly what I do when I'm actually building whole sets of stocks that I'm looking at. When I'm really looking seriously at the market, the first thing I'm doing is looking at 3,700 charts, and then I'm going and using scanners like TradeMiner to actually pull things out, because my retinas have already seen everything in the market in terms of fresh charts. Land knows that I'm a hardcore guy when it comes to being a chartist. And I think, as far as I know, I look at more individual charts than anybody but Land. I mean, Land looks at a million of them too. But that's what you've got to do to become successful as an investor. You've got to become very, very good at reading charts. We have more and more research that I've been showing you throughout this course that explains how valuable charts are in reality. Okay, so I'm completing a scan now where I've moved the wins up to 80%, and I've got everything else the same, except I've also now added the fact that I'm removing same symbol overlapping dates, because I've gone back and I'm doing a full across the stock database scan, and I've got a huge number of them, scanning over 1,100 stocks. And here we've got Nextra Energy Inc. comes up May 7. The main thing to understand, and I want to talk about this results area here, is that you can click on anything and it'll sort the way you want it. Here's 100% wins across the board, very bullish. If I want to have a very, very high win rate, if I want a high profitability for the trades, look, 27% in Avis Budget Group, and it was like 8 years. I mean, that was average. That's crazy. That's $2,690 on $10,000 invested. We can go for the highest average profit, which is that one, Avis Budget Group. And let's look at Avis. I haven't looked at CAR. I haven't looked at Avis in quite a while. Now, if I click on it, I can get CAR. And look, it looks like it might be forming a bottom. Look, it's been just basically channeling since March, and we've got this candlestick's bottom formation that looks like, for instance, we can, I'm messing around here a little bit too much, like it might be trying to move back up. The score is really important to understand. These are the trades that made the most amount of money in the fastest amount of time with the least amount of risk, right? So, for instance, GameStop is one of these really great trades over the last years. Colgate-Palmolive, right? You have to remember that these trends can end and reverse and go bad on you, and that's when you can end up with a losing trade. So that's why you always have to use 5% stops when you're testing these stops. I showed you that in a prior lecture. We don't have any 100% wins is the problem. We have an 89% win, and that's for, again, Avis Budget Group. So here comes Avis again. We keep seeing the same group of stocks when we're coming in here. That's why I recommend using this tool every quarter is when you should be coming back in and looking at the stock market. And that allows you to live your life for 3 months and then take 1 week and really sit down and grunge hard to find single stocks that are rising for your retirement accounts. The main thing to understand is there's a whole bunch of trade statistics that are in here, and these are trade statistics. There's also some other useful stuff, sector, industry, the dividend yield you can find in here. There's a lot of very interesting statistics that you can sort your searches by. Very important to understand. Also, notice these candlesticks down here on the payouts of each of the years that were traded in this seasonality strategy. And you can see that it peaked really high up back in 2009, and then it's petered out ever since then. GameStop was really, really strong for quite a while, and now it's been petering out. See how it was negative in 15 and 16, but it was less negative in 2016. So again, these are things that you need to pay close attention to. Not everything in here is going to be a great opportunity. Macy's has been pretty green all the way along, but pretty thin in terms of its profitability and seasonality. Colgate squeezing down as well into 2016. Bed Bath & Beyond squeezing down but becoming more profitable as we come out in 2016. L Brands, see that hump and then squeezing out. So it's important to understand that you have to use a lot of common sense to figure out which stock is the right one to buy. Remember, I focus on 3 stocks only out of all of these. I don't go get a bunch of them because diversification is going to knock your returns down. Why would you do that when you could just go get an index fund or ETF on a stock index? You can also change the chart views over here to where you can see different views of the same trade history. Remember, trade history is very interesting to look at, but it does not necessarily in any way reflect the future. Like, for instance, you might have thought you would have a really big trade in 2012 looking back at 2011, and it was exactly the reverse. Then it reversed again from 2012 to 2013. So again, you have to use really clean analysis, put the trade on, and then manage the trade, not knowing exactly what you're going to get on each trade looking forward. This is your risk-reward ratio, but remember, it's backward looking. It doesn't mean that that's going to be the exact risk-reward ratio looking forward on the next trade that you're actually going to hit when you actually calculate it out. This is the expected risk-reward ratio. The actual one that you'll get will be different than what's expected.